year for the first time, according to the IMF. Clearly a challenging time for you at the helm of the World Bank. I know you've launched a major push to make the bank function better, but these efforts take time. Can you give us an update? Where are you?
So first of all, thank you for having me. And yes, those are daunting challenges. And it's actually that issue of intertwined challenges of poverty, climate, healthcare, pandemics, that I think you can't disentangle these into neat little buckets. And that's what led to the World Bank changing its vision from just the eradication of poverty to also adding the aspect of livable planet into it. The good news is it's not us trying to do this by ourselves, and I think that's a very important part of the better bank. You're not in this by yourself. Our job is to ensure we do put our resources to work, we do put our people to work, but we do it even better if we do it in partnership with other multilateral banks, with the private sector, and with governments and civil society. Because there's these challenges, these numbers are so large that trying to solve it by one institution or the other will not work. And I think that's actually a large part of the underlying reform agenda in the bank is partnerships, both inside the bank and outside the bank. The second big part was to, when you expanded the vision to include livable planet, the idea was to sort of open the aperture so that people could focus on what made for livability in that country. In one country, it might be a fragility, conflict, violence issue leading to refugees and challenges. In others, it might be a climate issue. In a third one, it might be something to do with governance issues. And so there are different issues in each of these, and trying to find a way to do global thinking but local execution was that livable planet. And at that time, we added in the focus on women and young people. Women because they're half the population, and in the emerging markets, they have an even tougher time in getting the opportunity they should get. But if you did, imagine what they would do to productivity and economic growth. And so there's a plus on this. And for young people, 1.2 billion young people in the emerging markets are coming through the pipe, so to say, to be ready for a job in the next 15 years. The same countries are currently on a pathway to get about 400 odd million jobs. So there's a big gap there. And as I say all the time, forecasts are not destiny. So you can change it, but you have to do something to help to change that trajectory and jobs and have these young people contribute to our economic growth and future. That's all part of this better bank, along with the silos and the speed and the working and partnerships and all the rest of it.
The money is an important part of that. I know that you have launched a drive or are launching a drive to replenish the International Development Association, which is the arm that serves the poorest countries. Some Pacific and African leaders, the Prime Minister of Barbados, are all pushing for that goal to be $120 billion. Is that a realistic target?
Yeah, that's a great question. So yes, IDA is the part of our bank that goes to the 77 least sort of well-off countries in the world. And so it's truly a lifeline for them. For them, half their development money basically comes from IDA, because that's the way it works. So we're critical to their needs. And there's all kinds of good statistics around that we could get to if we have time. But the issue of what the next replenishment should be, you've got to put it in context. 93 billion is what the current one was, IDA 20, which is the contributions from the rich countries leveraged by our bond issuing system in the private markets, thanks to our AAA rating. What we're now trying to do is to get to past that. The African countries, President Ruto and a bunch of others, and Mia Motley from Barbados, would like to get to the 120. Somewhere between the 93 and the 120 would be a great thing. If we get to 120, that would be outstanding. That's what we're working on. But to get to 120, you've got to get the contributions from the rich countries to go from 24 billion to 30 billion, because that's the 4:1 leverage we get on top. The challenge with that, Andrea, is that right now, a number of countries are both facing fiscal challenges, and then, of course, there's the issue of the higher dollar versus their currencies. So their contributions are under double pressure. Think of the Japanese. The yen is down 25% from what it used to be. So just to keep pace, they got to go up 25. To go up, they got to go up 40-50%. And that's not easy to see my way through. So we'll see. We're fighting really hard to get through this. I think we just saw Denmark issued an announcement of 40% increase. A number of other countries, the UK and Spain, have talked about going up. I think the United States is working its way through what its contribution will be, and I'm reasonably optimistic it'll be a good number. So I think we've got a few countries that are in the right direction, a few in the others. We'll see where it all shakes out.
So at least 100 billion.
Oh yeah, that would be the idea.
And do you think that 120 is realistic?
It is. I would say so. It's just a question of whether we get there or not through what's going on in the world.
The other big arm of the World Bank, of course, is the International Bank for Reconstruction and Development, the IBRD. The World Bank's executive board has been considering proposals to change its internal lending guidelines.
Yes.
And I know that there was a meeting this morning.
Yes.
Can you tell us whether there's any news to share about reducing the lending to equity ratio?
So hot off the press, yes, that is true. We have got board approval today to change our equity to loan ratio down by another 1 percentage point, meaning it frees up the capacity in our balance sheet to be able to lend more. Just put it in context, there's something called the Capital Adequacy Framework in the G20 effort as part of the reform agenda when I joined, and that is meant to squeeze the balance sheet so you could take more out of it. Also meant to create new financial instruments that shareholders could contribute into. So a combination of squeezing the balance sheet through equity to loan ratios, but also through hybrid capital and portfolio guarantees has led to, I think, including what we just got today, probably close to $150 billion of more capacity to lend over the coming 7 to 10 years.
So just to be clear, you went from 19% to 18%?
Today, and in the couple of months before I joined last year, the bank had gone from 20 to 19. So it's really down 2 percentage points as we speak.
Okay. And another part of what you have been considering, or what the board has been looking at, are pricing changes that would affect clients. Can you say a few words about what you've done there and how that'll help client countries?
Again, this is IBRD principally to start with, because IDA is already either grants or deeply concessional. It's IBRD that tends to go to countries that are moving into middle income status and tends to be less concessional but longer tenor loans. So we've done a series of things. The first thing we've done is get 50-year loans available for global public goods. You invest in climate or global healthcare or pandemics, you get a 50-year loan. By the very nature of a tenor of 50 years, it's deeply concessional. What we just got approved today is 2 or 3 other things in the pricing that all put together make IBRD pricing a little more attractive to these countries. We're still, not as cheap as some other sources out there, but we are cheaper than at least most of the commercial sources with longer tenors, so that you put the two things together, we're an attractive source of funding. But along with that, we're also a knowledge bank, and I keep telling people there's a money bank and a knowledge bank. And what these middle income countries really want from us is that expertise of development. We've got experiences across the world in what worked well. So we know who did good things to get coal and wood out of home cooking and convert it to solar, with what things that worked in that process. We can take those learnings and take them to another country and another one and learn from each along the way. That knowledge bank, to be honest, is as valuable to these countries as the money bank. And so it's a mix of pricing and skills that we bring.
Fitch Ratings has said that the IBRD could lend a further $117 billion, or 47% of its current banking exposure, before facing kind of downgrades.
Yeah, if you look at Fitch, they also put a few small provisos in there. Those are not small. They include things like all kinds of assumptions. And so if you actually go through it, what we're going through right now, these 1 and 100 basis points, that's about 70 to 80 billion of lending. That came from that kind of thinking of saying, what can we do before we worry about our AAA rating? Why is the AAA rating important? And that's because that's the basis on which we can generate, in the case of IDA, $4 for a dollar, and in the case of IBRD, between $7 and $10 for a dollar of capital, because our AAA rating allows us to raise money at a relatively low price, and it gives us the chance to still be a concessional lender of long-term tenor, which is the trick here.
Are there further steps that you could do? I mean, could you go to 17%?
I don't know. Each time we do one of these, we kind of study and look at what the histories are and what the projected use of capital is. Could I go further? Who knows? My attitude to this capital adequacy thing is keep looking at new instruments and ways to squeeze in the balance sheet. What we call balance sheet optimization is the technical term. And that essentially has to do with making sure that you use your balance sheet smart.
Right.
And that's kind of what we're trying to do.
So you're going to meet with Janet Yellen next week. We've got the annual meetings of the IMF and the World Bank here in Washington. Something like 10,000 people will be descending on Washington again.
Great for local tourism.
Yes.
Yeah.
Yes, and not so good for traffic.
Yes.
But you'll be meeting with Janet Yellen. What kind of a report card do you expect to get from her on the work that you've done so far?
So Janet and I get a chance to speak frequently and meet frequently. So none of anything I'm discussing with you is a surprise to either her or to me, including a so-called report card. I think you'll find that by and large she's very supportive of the things we've done on the evolution framework as a team. It's not just me, it's the whole group. We've done a lot of work on speed, which is, it used to take us 19 months for a project to go from, conception to loan approval by the board. We're down to 16, headed to 12. I have examples of under 12 months, but I also have examples where it's much larger than the 19. And so the average tends to still be sticky to bring down to 12. But I was just in the Pacific Islands, and 2 projects in a row came in below 12 months. So we're doing the right thing on speed. Silos within the institution and partnerships. We've got a terrific co-financing digital platform put together for all the multilateral banks to share that we've launched. 80 odd projects are now in it. So I get a project to the country that I need to work on. I can't really finance it alone. I'd love the other MDBs to come in with me. Instead of going one by one to each of them and exposing the country to multiple due diligences, we take the project, put it into the platform, everybody can underwrite it together. Things that sound simple but actually require a lot of work, both in terms of process and platform, but also culturally. Yeah. And so it's, it's speed, it's these silos and working better together. Then there's all the work we're doing with the private sector to try to energize them, and that's a whole other topic. So there's a whole series of these that we're up to. We've kind of done in 20 countries, merged the management of our different parts of our bank to create one country head. So the client only meets one person. We talk about public-private partnerships, right? So most projects have a little bit of private money, a little bit of public money. Well, if we create a silo inside the bank of dealing with you, something private, something public, that's very hard. But if you can bring the management together, then you make it much easier for the client. Those are the kinds of things that we're trying to do.
We've talked about some of the global challenges facing us. We're also in the final weeks of a hugely important election here in the United States, which is also the World Bank's biggest shareholder. And one of the candidates, former President Donald Trump, is no fan of multilateral institutions or of work to combat climate change. What would happen to the bank and the cultural changes that you've set in motion at the bank if Trump were to be elected?
I think that President Trump was the one who actually authorized a capital increase at the IBRD when he was in the office. And so I think some of this that you just said doesn't quite fit with his actions when he was president at that time. My view of him, having dealt with him for years, is that at the end of the day, he understands the value if you can put it in the terms that make sense for what he's trying to get done for his administration's policies. And let me explain this in a different way. At the end of the day, which other institution do you know that can take $1 of government money and multiply it either 4 times or 10 times? Very few. And he understands leverage. And he understands the power of leverage in delivering greater value for that dollar. So that's one example. The second example is a lot of what we're doing here also creates markets for American companies and other global companies and intellectual property. After all, if countries develop, it helps us at our home as well. Should we be doing more things in the country? You can see most administrations have now begun to feel that it's important to do the right things in the country as well. But at the end of the day, if by doing the right development overseas, we can help to drive markets for American companies, that's great. If we can help to ensure that European companies benefit, that Indian companies benefit, this is good because it creates the links that you want. Similarly, let's talk those young people, those 1.2 billion. If actually 800 million of them do not end up with a job 15 years from today or during these 15 years, they have no sense of hope. They're going to do one of 2 or 3 things. Either create instability in their country, which impacts us, or migrate from their country, which impacts us, or end up in some way fanning some form of challenges through being refugees in a neighboring country, all of which finally comes home to roost when you happen to be the largest, richest, most, largest economy in the world. And so I think finding ways to ensure that we as a bank can answer the cause of development in different parts of the world is something that transcends one administration or the other. What might be required and important is to change how you focus on certain things, what else you can do and add on. I think we're up for that challenge because we have a role to play, and that's the idea.
Terrific. One of the other challenges that we've had has been a world that has seen more fragmentation, a kind of challenges to
Yes.
globalization that we took for granted for many decades.
Yes.
And there's been a lot of attention recently, including from Janet Yellen, about overcapacity in China. To what extent are you worried that if there is overcapacity in the second largest economy in the world, and that will cut off the opportunities for developing countries and emerging markets to increase production and actually create those jobs that you're talking about?
So you're asking two or three multiple questions inside that. And if you kind of back off to the first part of it, the globalization, fragmentation, deglobalization, geopolitics kind of question, I really think that what's coming through now as you look at the data on trade is you can see trade is actually growing again, but it's growing in somewhat different ways. And it's growing in different geographies and different connections. So I personally have been saying this for years, that regional trade agreements and bilateral trade agreements are going to pick up more and more importance as the years go by. And this is, well before any recent geopolitics. I used to chair the International Chamber of Commerce, and I saw a trend at that time of these regional and bilateral trade agreements. This is back 5-6 years ago. So I'm quite a believer that that will happen and continue to happen. And I think that changes the environment for where manufacturing is done for what. So let me give you an example of Africa. Africa is blessed with critical minerals and metals that are critical for the energy transition. But so also are they blessed with land and water and sun. So if you think about that combination of resources, they could be a great source for renewable energy. They could be a great source for these critical minerals and metals with value-added manufacturing on the ground, so they create jobs there, not just extraction. They could be a great source for agriculture. Today, Africa is food stressed. It could actually take care of its own food and provide food 10 to 15 years in the future if we did the right thing with irrigation, fertilizer, soil testing, agricultural warehouses, connectivity across countries, and so on. So I kind of think about this as an opportunity to rebuild an economy, whatever be these new trends, with bilateral, regional trade, with the effort around getting the right kind of jobs in the right location. That's the way I think about it.
You've got this Jobs Council that you've created now.
Yes.
That'll be meeting for the first time, I think, next week, right?
Yes.
At the, and I know it's headed by the president of Singapore and the former
President of Chile.
President of Chile.
Yes.
What exactly do you expect this council to do, and have the other members been appointed yet?
So the idea of the 1.2 billion versus the 420 million, we're trying to ensure that we can try and address that gap so that forecasts are not destiny, right? That's the idea. So there's a series of people who are members of the council. There's CEOs, there's economists, and there's a few civil society folks who have done skilling institutes in a couple of countries, for example, and some entrepreneurial, innovate sort of incubator types who can also be used for purposes of helping to see if we can drive entrepreneurial growth in countries. Because jobs will come from so many different things. And the general idea is to see if we can help to create hypotheses of what kinds of things to invest in which will generate jobs. So will education, skilling, health, infrastructure, and work on the climate, will that be the enablers that enable jobs to be created with the right policies for private sector and other investing? And so if that be the case, then how can institutions like us and the IMF working together do things to change how jobs be the output of all this work? That's what that group is going to do. That's what they're focused on.
Terrific. So before we let you go, we've seen terrible devastation in Gaza over the past year since the last meetings that the Hamas attacks on southern Israel occurred almost
October
exactly
7th,
a year
yeah.
ago on October 7th when world financial leaders were meeting in Marrakesh. And over that past year, the scale of human destruction and loss of life is just extraordinary. Now there is, I think something like 2 million people are displaced in Gaza. We've got 40,000 people displaced in Lebanon at the moment. And there is increasingly a concern about a broader regional war, Iran's involvement. What do you see as the impact of that on the global economy, and then also specifically on the countries that you're trying to help? We saw the massive impact that Russia's invasion of Ukraine caused specifically for developing countries. So just walk us through what you see as the consequences
sure.
now.
Look, first of all, I think this unbelievable loss of life, women, children, others, civilians, is just unconscionable on all sides. It started with terrorism, it ended up with what's going on now, and you've got this both situation leading to the deaths of civilians in this. That's, first of all, that's just a whole issue by itself. The economic impact of this war, on the other hand, depends a great deal on how much this spreads. If it doesn't spread, then by the nature of the fact that Gaza and Palestine have been relatively small contributors to the world economy, it tends to have a lower impact on the world economic system. If anything, in an odd kind of way, the reconstruction will lead to the spending of money in those economies, but that's the wrong way to think about it. If it spreads regionally, then it becomes a completely different issue, because now you start going into places that are far larger contributors to the world economy, both in terms of dollars, but also in terms of minerals and metals and oil and the like, and people. So I don't know how to answer that, because I don't know how to handicap that second possibility of it spreading. What we can do as an institution, we're trying. We have put money to work from this last board meeting, our annual earnings from IBRD, 300 million, which is 6 times what we normally give, is going to the Palestinian Authority to help them with managing things on the ground. The problem is 300 million is important, but it's small compared to what they will need. Current estimates of the loss and damage that the World Bank is making with the UN and the EU in Palestine is closer to a $14 to $20 billion destruction of property that has already happened. Forget about what's happening now in Lebanon.
And that was the estimate in April. It must
That's
be
correct.
higher. It must
That's
be
correct.
much
So that's
higher
it.
by
It was
now.
14 at that time. It's probably between 14 and 20 today, and I don't even know what the Lebanese item is yet. I have no idea of what that number is. So this is a large number. And what we have tried to do is to put together a group of experts who are from Jordan, Israel, Palestine itself, and somebody else from the European world and the American world and Egypt, and see if we can get these people to help us understand, if there were to be a peaceful solution on the ground, what could the bank do in the first 6 months, and what would we do in the next 5 years to be a helpful partner to change the trajectory of the Palestinian economy in the coming 5-10 years. I think that's where we're going to have to figure out how to then have that publicly discussed and debated, and then find the resources for it. My belief is you will need both public and private resources. This is true of my overall belief in the bank as well. I think the problems you started this interview with are bigger than just public resources or multilateral bank or philanthropic resources. You do need the private sector. There are a series of things we're trying to do with the private sector, from guarantees to regulatory policy clarity to helping with foreign exchange risk, to see if we can try and become the guys who plenty of those. For example, middle-income countries where we have to put money to work to change and bend the arc of renewable energy versus fossil fuel, so that as we go forward, the natural growth of those countries does not create fossil fuel heavy growth, which wipes out all the reductions that you're doing in Europe and America and Japan. That you can do. That does not require the same question to be answered that you just asked. When you get into the really fragile countries, typically the private sector there that's active is local, small and medium enterprises. Catering to them and helping them find a way to grow is a completely different set of skills and tools that you need than what you need for these global investors or large regional investors to invest in more stable countries. I think trying not to mix the two would serve us all well when it comes to discussing what kind of private sector thinking we need to have. So at the World Bank, we tend to be very focused on those larger global and regional investors. Currently, I'm trying to work with the IFC to see if over the next few months and years, can we create adequate resources and people who know how to help these small and medium enterprises in these smaller countries really find a way to grow. Small and medium enterprises generate 80% of jobs in almost all countries. We do have to do something about them. Public jobs, government and policy can create the enabling conditions for them, but you kind of need capital for them and enabling conditions. And I think we can help with both of those.
So just in closing, how would you describe where your mind is now after a year and a half in this job?
Yeah.
It's obviously a very large and often very bureaucratic institution. You're trying to affect cultural change in an institution that is, could be resistant to that. So where are you now? I mean, are you feeling upbeat? Are you feeling resolute?
I'm generally optimistic about where I'm going. I think if you look at what we've got done in this year and a half, your question about the Janet Yellen scorecard, I think you will find that we've made a lot of progress, more than people would have thought we would get done in the course of 16, 17 months. And I think there's a lot more to do. So I feel that pressure every day, but I also feel the privilege of the opportunity to be working with a group of people who, frankly, Andrea, from their experiences and their subject matter expertise, you want to solve these kinds of problems, you want them by your side. The question is, can I release them from some of the processes and methods that may have overtaken us over the years, and can I make the place fit for purpose for the kinds of challenges we've got with this team of people? That's what I'm trying to do with this gang, and I think I'm optimistic about where we're going.
Terrific. Well, let's end it there. Thank you so much.
Thank
Reuters
you.
next. We're so glad to have you. Ajay Banga. Thank you.
Thank you very much.
Thank you.
Thanks.
We've hit a lot of territory.
Yeah, you had a lot of questions there to go work with. You okay with that?
Yeah.
Just leave this here?
Yeah, thank you.
Super.
Thank you. Thanks so much.
Oh, of course. Thank you.
You're still playing.
No,
We can't keep it tied down.
David, did this sound like what you're familiar with?
It sounded good. There was some real news there.
Yeah.
So thank you for that.
Actually,
As opposed to what you usually do.
It's
Thank you so much.
So, just so you know,